Welcome to Keep More Benjamins. Screencast today is going to be on basics for understanding stock listings. A lot of people look at stocks and they go, "Oh, this is really confusing. I don't get it," and everything. And it is not that bad. So I'm just going to kind of take things one step at a time and introduce some very, very basic components to you. First off, Google Finance is kind of my go-to spot for information. While I'm not always a fan of everything Google does with spying on me and taking pictures of my house and putting it on Google Street View, their finance site is really, really helpful. Lots of good information. So, and it's free. So here we go. If you type in finance on the Google browser, it'll get you there. I typed in Harley Davidson in the little search bar up here, and it came back with HOG, which is their ticker symbol. Back in the old days of newspapers, things were abbreviated because they didn't have so much space. So now there's HOG is like I said, a ticker symbol, just an abbreviation for Harley. And every company has that. You'll see that probably as we go through today. For your purposes, knowing the ticker symbols is kind of nice because once you find a company that you like, it's just faster to type in HOG than it is to type in Harley Davidson and hit enter. So that's that. You also see that this is stock traded on the New York Stock Exchange. You see that here. You see that here as well. That's just the stock exchange where this is bought and sold. There's stock exchanges all over the world and several in the United States. So that's just kind of a trivia type of piece. I don't even know if that matters when you go to E-Trade or TD Ameritrade or something like that. That won't matter. What will matter is that you know the name that you're dealing with. So a little background. So the price right now is $60.54. Very easy. That's the price per share. A lot of my students will see this is green when the stock is up and red when it's down. They'll see this and freak out and go, "Oh, I'm not going to buy it." Don't let that dissuade you. That is not a big deal. Being down 44 cents in one day isn't that big a deal for a stock that's worth $60. If you were to go back just over the past 5 days, let me click 5D here, you can see there's a little bit of volatility every day. I mean, it goes up and it goes down. Lately, a little more down than up. And that's okay. That's not going to keep me up at night. Don't worry about this. Now, if this was down like $20 in one day, yes, that's something to be concerned about and check out. Range. That's just the trading range of value that the stock has had the preceding day. Yesterday it was 60.24 on the low end, 61.04 on the high end, just kind of brackets and tells you what's going on. That's kind of, again, a holdover from the newspaper days because I can click 1D over here and get a visual representation of that, which personally I kind of like this a little bit better. 52-week. Same deal, but now you're going back 52 weeks from today. So today is September 26th. This goes back to September of last year and tells me the price on the low end, $60 and $74 on the high end. That's what it's traded. And again, you can see that going back 1 year, and you get that in pictures, which is, again, kind of nice. One thing to note, our price right now is really close to the low price over the past year. That tells me, wonder what's going on. That points me over in this direction to the news. I would want to know, why is it low? Is something going on with the company? Or maybe is this something that's been going on with the overall stock market? I don't know. But that's something that tells me I need to research that and figure out why is it low right now and why was it higher before? So honestly, with looking at stocks, you kind of have to pull out the sleuth in you and do a little research, do a little bit of investigative work. That's one piece I look at. It opened at 60.86 today. That's the opening price today. Not that important. Volume. Volume refers to the number of shares traded. You see that down here in this bar graph. Whenever volume spikes, that's important. Pay attention to that because something's going on with the company. You can see a lot of people were probably buying here, more demand than supply, and so that drives share prices up. Hey, it's really popular. Everybody's buying it. Hey, good news for the stock. Yay, it's going up. and you see that with volume spike. Over here, though, volume spiked again, but that's kind of for bad reasons. People were selling the stock here. And again, be a detective. What's going on? Why is this happening? What news came out about Harley here that made everybody sell? Or again, maybe that's something that's stock market wide. Maybe the stock market had a bad week that week, or maybe a bad day and everybody's selling off. Either way, if you're going to be an informed investor, you need to research that and find that out. So again, that's just pointing you in this direction to the news. Market cap, $13 billion. That's the value of this company. Harley-Davidson's worth $13 billion. Now, if you highlight this, it tells you that that's, if you take the number of, let me go over here, the number of shares over here, 217 million shares, and multiply that by $60, gets you to $13 billion. Now, in a perfect world, that $13 billion should accurately reflect the value of all of Harley-Davidson's worth. So in other words, if you added up all of their equipment, all of their property, all of their stuff, all of their physical assets, that should equal about $13 billion. Sometimes it does, sometimes it doesn't. Because remember, let me kind of zoom out here in concept. When you're a shareholder, you own one portion of the company. There are 217 million shares. If you own one share, you are one little tiny slice of Harley-Davidson. And so that value, that capitalization should, again, in a perfect world, reflect the value of Harley-Davidson, if that makes sense, if you were to add up all their equipment, machines, and property, and everything else. In a good time where the economy is booming, this will be overinflated because stock's overpriced. And during recessions, this number will be too low because, bottom line, the company is still worth more than the share price. So it kind of goes up and down. PE. I could make a video just on PE, so I'm going to keep it real simple. Price to earnings ratio just tells you if the price and the earnings are in line with one another. You do not want to buy an overpriced pig. No connection to hog. You don't want to buy something that's overpriced. You don't want to do that for shoes. You don't want to do that for a car. You don't want to do that with stocks either. And essentially, long story short, most of the time, and there's exceptions to this, most of the time when PE is like 10, 15, 20, 25, something like that, that's telling you that the price of the stock, right here, and the earnings of the company are in line. They're appropriate. If you have a PE of like 80 or 100 or something like that, that's out of whack. That's the price is high and the earnings are low. You have to be careful. If the company's growing quickly, it might be okay. Google was like that. Google had a very high PE early on in its history when it first came out with stock. But look at Google. Google grew out of that and their earnings caught up with the price, and Google's just fine today. But if you're dealing with a company that's a bubble ready to pop, where people have bought and bought and bought and bought and bought, and it drove the price up, now that price is out of whack. And you don't want to be holding that when it crashes. So that's why PE is helpful. And again, there's more to it than that, but that's kind of a very basic overview of PE. Dividends. One of the ways, remember, you are a part owner in the company. One of the ways that you can get value back as a part owner is to be paid dividends. And you can see that here. Usually quarterly, 4 times a year, companies will, not all companies, but a lot of companies pay dividends. And the way it works is, you can see 21 cents here, 28 cents here, and so on. If, let's say you own 10 shares of Harley, you take 10 times 0.28 rather, and that would give you $2.80 for a check. And the company sends you a check, and now with everything being electronic, they probably just credit your account and you see your balance go up. But again, you are a part owner. Getting paid dividends is a way that you can make money in the stock market without selling your stock. That's the nice thing about dividends. A lot of retirees really like high dividend paying companies for that reason. They don't have to sell their investment. Earnings per share, 389. That's just a little bit of math here for you that they crank out for you rather. Shares, 217 million shares. I alluded to that before. Beta is a measure of volatility, and I don't get into that too much. Some people do. I'm just going to skip it for right now. Institutionally owned. Here's what that means. 86% of all the shares for Harley are owned by pensions and mutual fund companies. So what that means is only 14% of Harley-Davidson stock is just owned by individuals who go home at night and buy Harley-Davidson stock. Most of this is owned by other large investment firms, if that makes sense. So that's this top stuff. And yeah, that's interesting. Yes, and yes, you can play with the graph. Oh, look. Oh, whoa. Oh, it's going down. Ah! Oh, now it's getting better. Woo! That's very fun. But I'm telling you, you need to look at the news. You can goof around with all this other stuff, but at the end of the day, if you don't know anything about the company, this is worthless. This should just point you over here. You need to know what the company makes. You need to know if they are a profitable company. You need to know if it's a well-led company or if the CEO is an absolute moron and driving the company into the ground. You need to know if the company is maybe going to be bought out or if the company is buying other companies. That's a really good sign. Weak companies don't buy other companies. Strong companies buy companies. So there's a lot of news over here, and it's honestly, folks, it's common sense. If you're seeing good news over here, yes, they're meeting expectations. Yes, they're exceeding expectations. They're making more money than they thought. This is not complex. It doesn't have to be. Having said that, when I scroll through this, will there be the occasional news piece that I don't understand? Yeah, sure. I don't know every single thing there is to know about stocks and, for that matter, about this company. But if you scroll through, I mean, good heavens, look at all the news. You will probably be able to glean enough information to make a pretty good judgment call on, is this company doing well or not? Okay? Now, granted, yes, you can always research more, but that's kind of the basic gist of understanding how to read a stock listing. For more information, please check out keepmorebenjamins.com and Keep More Benjamins YouTube channel.